Well, good afternoon. Happy Friday, March 14th. Mark Milam here, your mortgage professional. Let's get right to it as we head into the St. Patty's Day weekend. So, not a bad week for mortgage rates, but really we're now off of those sort of record lows for 2025. Mortgage rates ticked up on average about an eighth of a point over the course of the week. Why did this happen? Was there any fundamental news that came out? This is the week, and you can see red days are bad days. That's where the value of the mortgage-backed securities are going down, interest rates are going up. And honestly, no. I mean, economic news came in our favor. This is the Producer Price Index. It's a measure of inflation. Came in under expectations. This is the Consumer Price Index. That's one of the most widely recognized measures of inflation. It came in under expectations as well. And we actually, when we take a look at that consumer price index, we're down to 2.8%. Now, the CPI always runs a little bit hotter than the Fed's favored measure of inflation. That's personal consumption expenditures. And really, the culprit here is shelter inflation. And when we talk about shelter, we mean rents. We don't mean the price to buy a home. We're talking about what market rents are. According to CPI, which is a government-produced report, right, according to the Bureau of Labor Statistics, shelter inflation or rent inflation is still rising at 4.2% per year. There's a huge question mark, a lot of raised eyebrows around that number. That is not consistent with any other measure of market rents, whether it's the Apartment List National Rent Index, the Zillow Rent Index, the CoreLogic Single Family Rent Index. All of those indexes are far lower, sub 2%, some of them even negative year over year in terms of rent growth. So the BLS number being at 4.2% is a huge pull up on that inflation number. In fact, if you just zeroed out shelter inflation, you said, hey, we're neither appreciating nor depreciating in the rental environment, boy, we'd have CPI sub 2% already. Inflation would quote unquote be defeated if it weren't for that shelter inflation number. So that's working against us a little bit. Still, the overall number did come in lower than expectations, so no real headwinds in terms of economic news. What were the headwinds? Well, it's a lot around what's happening with the tariffs. And it's not necessarily tariffs specifically, just that particular event. It's the uncertainty and the volatility around it. One day tariffs are on, the next day they're off. The next day maybe there's going to be retaliatory tariffs that are going to be even higher than the initial tariffs. It's very hard for markets to price in what's going to happen when it's this volatile and it changes this fast day to day. And that's why you see a lot of markets struggling right now. Any market, whether that's the stock market or the bond market, which heavily influences mortgage rates, they are affected by uncertainty and volatility. And that's really what we saw this week. That's the reason why we saw mortgage interest rates tick up about an eighth of a point. Not to be lost in all this, and before I close out, Rocket Companies has announced their intention to acquire Redfin in a $1.75 billion deal in an attempt to reshape online home buying and really home buying in general. Now, if you do a little digging on this topic, you'll come to realize that Redfin has not posted an operational net profit in the past 3 years. In fact, each of the past 3 years, Redfin has posted over $100 million in losses per year. So for that reason alone, Redfin needed to do something. They were struggling, certainly behind, in terms of number of subscribers, behind Zillow. In fact, if you read this article from Redfin CEO Glenn Kelman, he says, listen, in an interview with the Puget Sound Business Journal, he said that if Redfin had been sold to any other company, it would have been stripped for parts. So a big part of this sale to Rocket was not to dismantle the company. And really what Rocket is seeking to create here is an end-to-end ecosystem for everything housing, whether that's home search, rental, real estate brokerage, financing, title and closing, and servicing. Also some personal financial tools. Redfin, Rocket, they want everything to happen within their ecosystem. And if you're not part of their ecosystem, you're not included. And so this message going out to all of my brethren who are more community minded when it comes to real estate services, attorney or title services, and certainly mortgage lenders, this is a dividing line for our industry. You know, do you want a big entity, national, online, consumer direct with no real community presence? Or do you want to do things in a more community, local, with that kind of an awareness? And ultimately, this will be interesting to see how this plays out. It's a huge news for our sector, for our housing sector. and it will be fascinating to see if it passes through all the regulatory approvals that are necessary for it to be finalized. If I can be of any service to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com. Have a good weekend.